Welcome. Okay, so happy holidays or Boxing Day. I know you Americans don't do Boxing Day, but I wanted to do a class today that is a gift. It's a holiday gift to my students as a good review, and it's going to be a gift to anybody new that wants to make a lot of money from trading. And what I'm going to share in today's class is a free lesson and just a piece of what I teach in my full coaching. So stay tuned to the very end because I promise you this one lesson will change your trading career. It's that important and that significant. Okay, so let's jump right in, and I'm going to have a little bit of backup, a little bit of a backstory to this. So again, stay with me to the end. You do not want to miss this class. Now, my students know this because I've drilled it into their minds, but I'm going to just reach out to my students that are on this call right now and ask them, what is the most important thing that I teach you guys to find, not to do? What's the most important thing that I teach you guys to find? So John says value. Okay, and John would be 100% right. Okay, so if you don't know what value is in trading, you're not a trader. Okay, I don't know what you're doing, patterns, but you're looking in the wrong direction. And just the other day, I put a video in my room about something that was really, really important, and I'm just going to pop the video up right now just to show you guys. So hopefully that'll start. I don't know why it didn't start, but interesting. No, screen didn't pop up. But if you don't understand what value is, right, you're looking in the wrong place and you're doing trading completely wrong. So value, and I'm going to use a bit of a backdrop here. Value betting in sports is the only way to make money, right? And I made this little video about, what exact, I posted a video about what exactly value is. And it's the same in poker, where in poker we call it expected value, okay? Expected value. Now, I'm going to do this little bit of a backstory here. And again, bear with me. We'll get to the charts, and I'm going to show you how you can find value in trading, okay? So what is expected value? Now, many of you have probably seen where you've seen these poker players making millions of dollars, and yet it seems to be a very, very small percentage of them that are making millions of dollars, right? And it's the same holds true in sports betting, right? There is a very, very tiny percentage of sports bettors that make money, and the rest basically lose money. Well, it's the same in trading, right? But if you look at the sports bettors that make money, the guys that are making the vast majority of the money in sports betting, they're betting on value. And it's the same in the poker world. The guys that are the best poker players in the world that are making the most amount of money are the guys that find and exploit the highest expected value. So expected value is the anticipated value for an investment at some point in the future. Okay. And in statistical and probability analysis, the expected value is calculated by multiplying each of the possible outcomes by the likelihood each outcome will occur, and then summing up those values. Now, that's a really complicated thing to say, isn't it? Right? What exactly does that mean? And so in poker, if we talk about poker expected value specifically, if you think of it like this, and again, I'm going to give you these backdrops, and we're going to get to the trading aspect of it. But in poker, if you really think about it, um, it really makes a lot of really simple common sense. And I want you to understand it from a poker point of view because there's more controlled variables in poker. So if you're playing poker and you're sitting at a table, how many cards are there in the deck? Right? How many cards are there in a deck? There's 52 cards in a poker deck. So there's a very finite number of possible outcomes. Do you understand? There's a finite number of possible outcomes. And particularly, the chance of you having any two cards is approximately, I believe, 1,352. So there's 1,352 probabilities that you would have any two cards. It's finite, right? So if you have these particular cards, let's just say ace queen in this value in this situation, and this guy bets, and this guy bets, and this guy bets, and this guy bets, and this guy bets or calls, then we know that he has 2 of the 52, 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 and he has 2 of the 52. So now we can make some assumptions about what cards they have by what they do, which can help us find the value in the two cards that we have. So for example, if this guy bets, let's say this bet is $1, and this guy bets $5, what is the probability that he has a weak card holding with 1, 2, 3, 4 people behind to act? It's very low, right? It's very, very low that he has cards like 5-6, like 5-2, like 10-9. So we can rule out when he bets $5 into this particular bet with 1, 2, 3, 4, 5 people behind him to act, we can assume that he has very, very high holding of cards. He probably has ace 10 or higher, right? Or he has a very strong pocket pair, like pocket 10s or higher, right? Because he's betting a very large amount of money with people behind him to act. So now we can narrow down our expected value with ace queen versus, pocket 10s, pocket jacks, pocket kings, pocket aces, right? Ace king, ace queen, ace jack suited. Those are the likely hands that he has in this particular thing. So now we can come up with an expected value of our holding. Does that make sense to you? So what if the next guy folds and the next guy folds and the next guy folds, and then this guy re-raises that $5 bet? Remember, the first bet was $1. If this guy re-raises that $5 bet to $20, well, now we can figure out our expected value with ace queen based on a new range of hands, because the likelihood that he's going to re-raise this guy, right, is who is the very first act, and we know he's got a strong hand. He's either going to be very polarized and have a complete bluff here, or he's going to have an even stronger hand, which means we can give him a range of pocket aces, pocket kings, or pocket queens. We can probably even rule out pocket jacks and pocket tens. And we can rule out ace queen, and we could, so his hand is going to be very, very strong or just a complete bluff. Does that make sense? So now I can come up with an expected value of my cards based on the fact that there is only 52 cards in the deck, and the behavior of the players that acted before me. Okay? So I wanted to use this poker hand as an example of how you make money as a poker player, and then we're going to translate it over into stock trading to give you an idea. Does that make sense? So in this context, my action should be one of two things. My action should probably fold because I'm way behind pocket aces. I'm way behind pocket kings. I only have 3 outs, really, for pocket 3 aces that could possibly come out of the 52. And this guy probably has one of those aces. So there's probably 2 aces. By the way, put your screen capture on mute, guys. You guys still see my screen? Because I can see somebody's screen right now. Do you guys still see my screen? Yeah. Tell me if you guys can still see my screen. Somebody's doing a screen share. Turn your screen off, please. Anybody? Okay, good. Okay, so let me continue. So does that make sense? So the profitable poker player folds this hand. Why? Because the expected value is he's not getting the right odds to make a $20 call here. Does that make sense? Now, the only other thing that could change that scenario if this guy was completely crazy, right? If he was completely a wild man, you might have some value in that. But that is how professional poker players make money. And in sports betting, it's the exact same thing. In sports betting, you don't really care about anything except for does the bet make sense? Does the bet make sense? Am I getting the right probabilities based upon the variables that are affecting the market? They don't care if the odds are, if you're a sports bettor and let's say you're betting football, you don't care who the quarterback is. You don't care who the wide receivers are. The professional sports bettor makes his money by getting value. Okay? So if you're a trader and you do not understand what value is, all that shit has got you fooled. You've got to understand what value is. So let's now get to some charts and we'll get to some things that actually apply to trading. Okay. So one of the simplest ways that you can find value when you're trading, and this is a very, very simple thing that you guys can start using tomorrow, okay? And you guys have always seen my charts, and have you noticed that there's always this little chart in the background? Right? And I'm going to make this really big because what this chart is it tells me a story about how much value I currently have. And I've just made it a little bit brighter right now so we can see it. So what this is an overlay that you can put in the compare of the SPY. Now, what is the SPY? The SPY is the index or the overall market environment, okay? So whenever I'm looking at a chart, it's really important for me to be able to judge what the stock that I'm trading is doing in relationship to the overall market. Does that make sense? Let's pretend this wasn't a stock. Let's pretend this was a house. And let's pretend this was the housing market. So let's say that you want to buy a house. and the house is called Baba. It lives on Baba Street. So you want to buy Baba 222 Baba Street. Well, how do you know if that's a good deal? How do you know if you're getting good value or if you're getting bad value? Well, if this was a house, what would you do? You'd pull the comparables of all the other houses in the neighborhood and you'd say, wow, this is a good deal, right? Does that make sense? So one of the easiest ways that we can figure out whether or not we should be engaging in the market just right off the bat is to look at the comparables of the rest of the market. Now, in the case of BABA, we wouldn't want to be watching the SPY. We would probably be wanting to watch the QQQ, which is the tech stock index, right? So you could use the SPY as a good overall indicator, but what if I drilled down to the QQQ? Right? That'd probably give me an even better indication because BABA is a tech company. Does that make sense? So with BABA down so much on the day, can you see why with the QQQ going so much higher, BABA didn't just like bleed out the entire day? Because in relationship to the overall market, there were participants that even though the news on BABA was complete shit, there were participants that found value in that market. Does that make sense? So one of the easiest ways that you can tell whether or not you should be buying or selling something is just by comparing it to something comparable. Now you can see here, BABA followed the overall market most of the time. So the correlation between BABA and the overall market is very, very strong. Now, will BABA be a very good buy here? Yes. There's value there. Do you understand? This is how professionals make decisions in the markets. Now, obviously, this was value to a longer-term player. And so that's why it's very important that when you're trading, you have something relative that you're comparing the market to. Now, I can teach you very, very, very specific ways to find if this is really good value, it's just okay value, or if you need better value. But the easiest way, and this is my Christmas gift for you guys, if you want to start making more money tomorrow, is to always compare what you're looking at to something that's relative to it and ask yourself if it's very good value. Does that make sense? So let's go down and let's look at how we can actually use this on some intraday or smaller time frame charts. How do I use this when I'm day trading? Okay. So let's say I was watching BABA on an intraday chart. Now I wanted to short this early in the morning, right? So it was a short to me because the news was very, very, very bad. So I wanted to short it, right? So I had to ask myself, at what point does it become way undervalued that somebody will find value on it and I need to get out of that stock, right? So I want to short it, so it's getting a bit complicated. I don't want to be buying BABA on this particular day because the context was a better edge to the short side. So when I wanted to short BABA on the market open, I had to ask myself, what was the overall market doing? in comparison to BABA. So I could see that the overall market closed down here. See my white line behind? And the overall market actually opened up higher, didn't it? So BABA, which was opening up much lower, in relationship to the overall market, was probably going to find a little bit of support. Did that make sense? In relationship to the overall market, BABA was going to find some support. Okay. Now, I particularly think that the story on BABA was really, really, really bad, and it's going lower, but I don't want to jump right into BABA. Does that make sense? Because the correlation to the overall market, at least on the intraday, is for the overall market to be higher. Now, what if I saw the overall market was way down too? Does that change the context? Guys in the room, answer the question. What if the overall market was also down 2% on that day? Would you guys agree that would change the context and I could be a bit more aggressive on my initial BABA short? Yes or no? You guys agree with that, right? All right. So let's play another scenario. What if the overall market was up 2%, was really strong? Would that change the context of how you would value and where you should get short on BABA as well? Do you see how easy this can become, guys? Yeah, you wouldn't want to look for longs instead because BABA is getting hammered, but you would want better value to get short on BABA. Does that make sense? Right? So if the overall market opened way down, not scaling that, but if the overall market opened way down, I would be more aggressive on BABA, getting short. If the overall market opened up really strong, I would wait for my trade on BABA. Value. If you're not trading like this, you're a sucker. If you're trading a pattern, if you're trading candlesticks, if you're trading anything else but value, you're a sucker. Sorry to tell you. Okay? So, all right. Value is everything. So in this context, when I saw the overall market was hardly up, it was barely up on the day, I knew I needed to wait a little bit for BABA before I could take my short. Now, this is just one context, right? But I wanted to use an extreme situation. So as I was watching BABA on Thursday, I saw this candle here, I thought to myself, okay, be patient. That's it. I didn't find a trade. I just said, be patient. Then I saw two more candles, right? And I saw, well, that's it. If it breaks that low, there is a good probability that I could use a risk of 230 as a stop. That's what I was thinking. And I was watching the overall market. Was the overall market going higher too? Or was it going to come down? Okay, so what did I just say? I was watching the overall market. Now, when BABA broke that low, I did not rush into that trade. Why? Because the overall market was going higher. Didn't I just say that? So I said, okay, I'm not going to rush into this trade. I still want to take the trade short, but I'm not going to rush in and I'm not going to do any size. Follow my thinking here, guys. Okay? Follow my thinking. So, if I was going to short BABA and the overall market looked like it was getting stronger, would you agree that if I decided to short it, should I risk, and I'm just going to use arbitrary numbers here, would it be wiser, understanding value in relationship, to do a big trade on BABA or a short trade or a smaller trade on BABA? What's the answer? Would you agree that even if you did want to short this breakdown, at this particular context and relationship to value of the overall market was to do a more smaller trade, right? So in this case, instead of maybe risking 2% on this trade, I could risk 1%. Would that make sense to you? You still could take the trade, but in relationship, contextually to value, 1% would be better risk, right? Let's continue. So let's say that you get short 1%. The market keeps going lower on BABA, but the market keeps going higher on the QQQ. You're still in the trade. Now the QQQ is starting to turn here. Maybe this is a place where you might want to add to your trade. Right? Maybe not. Let's see what happens. I'm just sharing with you how I think about the markets. I'm sharing with you how professionals think about the markets, because everything has to be a contextuality in relationship to BABA, or sorry, in relationship to something relative to it. Okay, so let's continue. See, market goes higher and BABA finds some support. That's not coincidental, is it? Let's continue. Market keeps going higher and BABA keeps finding some support. Market keeps going higher and higher. Now BABA's getting very weak. So that's actually telling me another story altogether, doesn't it? What's the story now? The story is that despite the market being strong, BABA is just a piece of dog crap today. There are just too many sellers in BABA. Does that make sense? So it tells me that my short that I took here is really good. I can hold on to that short because despite the market going higher, BABA is just getting smashed today. Hold on to my short. Hold on to my short. Hold on to my short. Look at this. The market keeps going higher and BABA cannot get any traction whatsoever. Okay. Now my students will see something else really important happened here. I'm not going to share everything in this free Christmas lesson. But this is even more good news to hold on to my BABA short. I'm certainly not going to add to my BABA short. I'm going to hold it because in relationship to value, this is just a piece of dog poo today. Hold it, hold it. Okay, finally getting a little bounce here. Market seems to be finding a top here too. Do you see that? Top rejection, top rejection, top rejection. So now if the market turns over, there is a very good chance that BABA is going to just bleed out very strong. And that's really what I'm hoping for. I'm hoping for the market to turn over and then BABA will just bleed out like crazy. There's the bleed out on BABA. There's the market turning over. Hold on to my trade. Maybe even add to my trade. Maybe even add to my trade. My average cost is pretty good. I'm in at 26.07. My stop was up here at 29. Maybe I could add to that trade. which would give me an average cost of about, probably wouldn't add to that trade. BABA keeps going lower, and the market now turned over and goes lower. You see how I'm thinking here? Hold my trade. Don't cover. Don't cover. That's what this story is telling me. This story is telling me that I don't need to cover this trade yet. Contextually, BABA is bleeding out because I have something to compare it to that's relative value. Hold my trade. Now, notice the market's bouncing a little bit here. And notice that BABA bounced a little bit with it. I don't like that. That's telling me that there is some trouble in paradise. That, remember, it didn't bounce before, right? There's some trouble in paradise. Get ready to take some profits. BABA keeps going lower. Now we can start to put all the pieces together. Okay. BABA now had a big thrust down with a very large volume candle as the market went higher. Do you see that? So now there is a very large separation between the relative value of the overall market and BABA. So I would expect BABA to find a bottom very soon, and especially if the overall market went higher. At the very minimum, I want to lock in my profits on BABA because in terms of relative value, it's not making sense anymore, and it's becoming more dangerous. So now I start to see volume coming in on these up candles. You see that? Notice the higher volume for most of the time was on the down candles, but now I'm starting to see candles come in with higher volume. And I'm noticing that the relative value of the overall market is not dropping lower. Now, if the overall value of the relative market was dropping lower, I would not cover my BABA trade. I would hold on to it. Does that make sense? But this is telling me it's time to take at least some profits on BABA because this didn't roll over. This actually is holding that level. Take some profits off the table, if not all the profits. Now notice the overall market goes higher. Definitely lock in your profits on BABA. Okay? Now, some people might say, Steve, would you buy that right there? I personally would not. But can you understand why, in terms of relative value, BABA was actually a really good deal here, wasn't it? And it made a lot of sense. But in the case of such a strong fundamental driver where the Chinese government was investigating them for monopolizing the market, I personally would not buy that. I'd like to tell you guys, I wish I would tell you, but I'm telling you the 100% truth here. I would not buy that. But did you understand why to larger term players, BABA represented good value here in relationship to the overall market? And it doesn't shock me. Oh, now it's interesting, right? See how the overall market turned over, right? It doesn't shock me that it went lower. I actually traded this on Friday. I don't even remember this happening because I was out of my trade. I got short there and I was out of my trade here. I don't even remember what happened next. Okay. But I remember BABA did find a bottom. Okay. But, you know, I got out of this trade. But you might say, Steve, well, the trade kept going. You look like an idiot right now. No, not at all. Not at all. Not at all. Not at all. Not for 1 second. Because at the time, I did the right thing, right? Remember, poker players don't give a shit that they're holding a strong hand like ace queen. Remember our poker analogy, right? Ace queen, right? EV poker, let me go back to that. Remember this hand? This is a strong hand, right? That's a strong hand. And a lot of suckers would just play that hand because it's a strong hand. But the smart poker player does not give a shit that he's got a strong hand. He cares that the expected value of the context that he knew was just not there. Because this guy most likely has pocket aces, pocket kings. And this guy probably has pocket jacks or better. Or ace king. So he's behind in that situation. Does that make sense? Gamblers make decisions based upon what they think their value, what they have. All they can see, they can't see value in relationship contextually. They just see, I have ace queen. I only have $107. I'm going all in. That's all they see. Professionals make decisions, even though I covered my trade here, I could have made more money, but contextually, that was the right thing to do. Right? In hindsight, I could have made more money. Right? That makes sense? So I'm actually glad that I forgot what happened on this, because all I remember is covering this trade, and then I remember it bouncing, right? So I remembered it bounced. So my point is this. My point is that if you're not making decisions based upon value or some type of expected value, you're just a gambler, right? Okay. So how can I use this let's go to a simpler, easier case of how can we use value in easier situations, because I wanted to use the extreme case of BABA to kind of prove a point. So another stock that I was watching was PLTR on Thursday. Okay. Now PLTR, I wanted to get long this stock. Okay, for whatever reason, okay, whatever reason you have that you want to get long it or short it, I don't really care what that reason is. I'm not here to teach you that reason. What I'm here is to show you how you can use a very, very simple tool to find out if you're overpaying or underpaying for something. So PLTR was my other stock that I wanted to get long on Friday. Now, notice what happened with PLTR. PLTR, the overall market gapped up and PLTR gapped up. Do you see that? The overall market was higher and PLTR was higher. Do you see that? Now watch. This is where it gets really exciting. If you lasted this long, you should really give me a like in this video, because you learned a tremendous amount in this that can start making you money tomorrow. So I want to get long PLTR for whatever reason you have. I'm not going to teach you that. But I'm going to show you how using relative value helped me make the best decision to find my PLTR. Now, when PLTR started selling off, but the overall market started going higher, and there was a divergence between the overall market going higher, and now PLTR was much lower, Can you understand how I used the relative value to find my trade? Now, I'm not going to just jump in, right? I'm going to wait, hopefully, for some type of candle structure. But you see the divergence between PLTR and the QQQ. Am I getting good value here? Remember, stop thinking about this as a stock. Think about this as a house. The overall market on the housing market is strong, and you're getting a deal on this house. Your comparables are all very strong. Forget the stock, forget patterns, forget that bullshit. Just think of it like a house. That's a very good trade for relative value on PLTR. Does that make sense, guys? So that's a good area to get long, and that's exactly what I did. A price popped up, and notice how fast of a reaction that was. You see how fast that reaction was? Why was that reaction so fast? Because I got a good value in relationship to the overall market. Now, I gave you guys absolute pure gold in this class. Okay? Absolutely pure gold. You can start using this in your trading tomorrow. I don't care if you want to buy if you want to short something or buy something. How you make that decision in order to learn how I do that personally, well, you got to take my full coaching. But you can start no matter what you're trading tomorrow, even if you're trading penny stocks. You can start using the relative value of anything that you're wanting to do, long or short, to find out if you're overpaying or underpaying for a trade. And if you always overpay for something, you have zero chance at being a trader. If you always underpay for something, even when your trade is wrong, you're going to make it as a trader. So understanding value and relative value is an extremely, extremely important thing that you need to do to make it as a trader. Okay? This was such an easy trade for me on Friday. I didn't even have to hesitate for 2 seconds. I took the trade, and I took the trade with size simply because I already had my other reasons for wanting to be long PLTR. And if you add that up with I was getting good relative value and compared to the overall market, it's a no-brainer. Okay, so if you like what I just shared with you and how you can start using it tomorrow in your trading, and you want to learn more about this, head on over to my coaching program. And I have a very short-term offer right now on my services just for the next few days, where I'm offering a discount for the holidays. Prices go back up on Monday. Not Monday, in the new year. Okay, guys, thank you all. Love you all. Bye for now, and see you in the new year.